You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody, that rockin' tune means it's time once again for a little program we like to call Around These Parts, the Option Block. Everyone's favorite. I hope it's your favorite. It's certainly mine. Bi-weekly source for all things options related, a little bit of options wit, some wisdom, some what's trading, some unusual activity, answers to your questions, some strategy breakdowns, a whole heck of a lot more. Stir it into the pot, and you have the delicious stew that is the Option Block. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. 15 programs for you guys to sink your teeth into, including over 600 archived episodes of this one program here alone, the Option Block. Where can you find all of that options goodness? Well, the easiest place, the mothership, the flagship, theoptionsinsider.com. Of course, breaking news from the options market there, unusual activity, education, alerts, all sorts of fun stuff, all baked into the site, as well as all of the radio. It's all there as well. Of course, you can always find it in all of your favorite outlets as well if you just want to mainline the radio, iTunes, TuneIn, Stitcher, and so on and so forth. Also available via our mobile app, available for iOS, Android, and the beloved Fire OS. I always forget to mention, too, you can always join us live every Monday and Thursday, 3 p.m. Central, 4 p.m. Eastern via Mixlr. So for all you hardcores who want to get in there, mix it up, ask questions, tease the Rock Lobster, all sorts of fun stuff, then you too can do that in the live chat there as well. However you listen, after the fact, via the app live, whatever you guys choose to do, make sure you hit us up with those questions, those comments. We do love to hear from you guys at the end of the day. We're gluttons for punishment, if you will. All right, and joining me on the old program today, we got a fun one. Let's start off with my typical cohort. Let's start off in scenic and lovely St. Charles, Illinois, where we are joined by none other than Uncle Mike Tosaw from RCM Wealth Advisors. Uncle Mike, welcome back to the program, sir.
Always happy to be here on this exciting day.
That was exciting. A little bit of green on the screens. I know that makes you and certainly your clients happy. We'll get to that in a little bit, but first let me go all the way out to the East Coast, where we are joined from the heartland of Maine by the Rock Lobster himself, Mr. Andrew Giovinazzi from OptionPit.com. Mr. G, welcome back to the program to you as well, sir.
It is good to be back. I think, was I gone on Monday? I think I was.
I do believe you were. You were usurped in the Option Pit seat on Monday, sir. So welcome back.
I feel like I've been gone for a week.
It's been a whole week. Hopefully you rested up, got your voice back, and you're ready to talk some options today. And usually that's our panel listeners, but today we said 3 is not enough. Let's go big or go home. Let's go for 4. And so we're bringing on a newcomer to the show and indeed to the network. She is Jill Malandrino, currently hanging her hat over there as the global markets reporter for NASDAQ, even though she's been in and around the option space for some time. We're happy to have her on the program. Jill, welcome to the Option Block.
Thank you for having me. It's a big day for us over at NASDAQ.
It is a big day. You guys are rocking and rolling. We'll get to all that in a second. But first, as we are wont to do with all of our first-timers here on the program and indeed on the network, why don't you go ahead and give our listeners a little bit of an overview of your background in the options markets and how you found your way over there to NASDAQ.
Sure. Well, just like a lot of people in the industry, my career has evolved along with the markets, and came from institutional trading side of the business. And the desk I was on in 2007 shut down. I made my way over to the media side, focusing on options trading products. And now I've done a lot of work with the NASDAQ over the past 5 to 6 years, but we made it official the beginning of this year, and I am reporting on everything from options and related derivatives to energy futures, commodities, and NASDAQ-specific product. So it's been quite a whirlwind, but it's been a really exciting year for us, and we're only just a quarter into it.
Very exciting day indeed. We're going to break it down a little bit, so let's get right to it. It's time for the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, welcome to the trading block. Like the man said, this is usually the portion of the show where we break down what's moving, what's shaking, what caught our eye in today's market activity. Of course, we're going to get to that in a little bit, but it is a little bit of a special day, especially for our friends over there at NASDAQ. Some of you who were in the chat room earlier heard my chat with Kevin Kennedy, the head of options over there at NASDAQ. But as Jill referenced as well, a lot going on over there, including the relaunch, the rebirth, like a phoenix over there of the old Philly. Yes, the Philly has been a stalwart in the options business for some time, but NASDAQ deciding to really double down on the floor-based execution over there with a whole new venue, whole new building, whole new facility, whole new tech, the whole 9 yards. So we thought, who better than Jill, who has been there all day? And I really wanted to get out there, Jill. As our schedule, we couldn't make it happen. So I'm glad you were there to kind of see it live. We can kind of live secondhand through your experiences. First off, walk us through why did NASDAQ decide in this day and age of tech and HFT and low latency trading, why do they want to double down on the trading floor?
Well, before we get into that, if anyone wants to check it out on Twitter, Facebook, or LinkedIn, we have some footage that no one else has of us traveling around the trading floor, so you can get a real bird's eye view of what we have compiled here. We took the best of the Philadelphia floor traders, combined it with our state-of-the-art technology, and have really launched an incredible floor. It is like nothing that you've ever seen. It almost looks like you're walking into a Google or an Apple office. It really invites, whether you're on the trading floor or the other 3 floors associated with NASDAQ, it's just an open, collaborative, high-tech setting, and the energy is just off the charts here today. And, it coincides with our history. The Philadelphia Stock Exchange, our origins are from the 1700s. In fact, our first trading day was in 1790, and we kind of just evolved along with the markets. And, here we are today with the most highly advanced floor in the business. And I think it's encouraging not only for the Philadelphia traders here, but just for the industry in general. We're seeing regional exchanges either consolidate or shut down. We are actually growing. And I think it's great to see that floor presence again, where we're taking, the best of what the pits have to offer, the state-of-the-art technology with our iNet platform. And, it's one of the most exciting floors today. There was a nice buzz going all day long. Even when we were filming down there during lunch, there was orders being yelled out, market makers facilitating trade, and it was really active. I think it says a lot for what NASDAQ has done with our 6 options exchanges. We now own about 42% of daily options trading volume in the U.S., and we're not concerned about options industry sort of hitting a plateau. We are looking at growth, over the next multiple years out.
Yeah, you guys are really doubling down over there, which certainly is encouraging to me. I was talking to Kevin, talking to some of your people down at the FIA show, not talking to you today as well. Getting just that gist from NASDAQ that they didn't just buy a total now of 3 extras, a total of 6 options exchanges because options were kind of a bit of an afterthought to them. No, really, it does seem like options are first and foremost over there at NASDAQ these days, or very much at least front and center. Of course, they're doubling down on the Philly. They, of course, brought you on to kind of be their options spokesperson, which we love. We love having an exchange to have actually someone who's dedicated to out there talking about and representing options. We certainly like that. We're certainly hearing a lot too, certainly from your activity and others, that NASDAQ wants to get a lot more active in the education and outreach, which is something that, quite frankly, a lot of exchange groups outside of the SBUX have kind of walked away from in recent years. So I'm happy to see more people getting to play in that arena as well. So it certainly sounds like you guys are really doubling down. But let's get back to it really quick, because I know you have to run in a little bit. What really was the vibe like, and why did Philly in this day and age in NASDAQ really decide, all right, you know what, 2017, the floor is where we want to be. We're going to double down on this facility?
Well, I think what's really interesting with NASDAQ is that we're not just an exchange. We are a leading fintech company. So it's more than just facilitating trade. As you mentioned before, it's about options education. It's about community outreach. And I think that's why it was really important that NASDAQ PHLX remained in Philadelphia. You have some of the best resources of technology here. We have some of the top graduates in the country right around the block from here. And I think not only from the demographics that Philadelphia has to offer, but just also the talent that's around here, it made sense. We have, some of the top traders here. We have some of the top in technology. And being a fintech firm, it's not just about facilitating trade. It's about encompassing all of that. So I think the future is incredible here. The vibe was great. Like I said, it wasn't like, walking into other trading desks or other trading floors where it's sort of flat, it's monotone. Everybody was busy. Everybody was having, again, it's earnings season, so there was a little bit more volume on the floor, but it's definitely a different vibe at any other floor that I've been to, and I've covered every U.S. major exchange from Chicago to New York to Philadelphia, and this is something that I have not experienced in quite some time. And the only difference was there was just no paper on the floor this time, but the buzz was certainly there, and it was quite active today. And like I said, I think what NASDAQ is doing right is they're not just taking the position of being an exchange. They are way more than that, and they're looking at it as being a fintech company, a fintech leader, and leading the way in innovation.
Yeah, I noticed you guys did also launch recently a NASDAQ Ventures Fund, so you're getting to play in that space as well. That certainly kind of feeds into that whole fintech thing you were just talking about as well, which is, of course, very active and very hot these days. And getting the gist from Kevin, it sounds like talking to you as well. It's I think people, when we say trading floor, they have a certain image comes to mind. There's a certain connotation with that term of, the old school SIBO floor that, Andrew and I used to stand with a bunch of crazy guys running around with jackets, with paper and everything else like that. And it sounds like, from your description of talking to Kevin today, that, this is a little bit different. First off, I think the physical space is a little bit smaller, which I think is an interesting choice. People probably think when you make a new exchange, you make it bigger. You kind of went the other way, made it a little smaller to maybe put a little bit more of that liquidity together. And then also obviously doubling down the tech for things like complex orders. I believe I heard it's up to 15 legs, which is an incredible order. So I wouldn't want to be the local having to price that out, but still, it sounds like a lot of interesting stuff cooking over there on the Philly floor today.
Right. Well, and that's exactly what the technology allows you to do, whether you're trading, a two-leg spread or you're going as complex as 8 separate legs. That's what these complex order systems allow these traders to do. And you had mentioned before, we're making the floor smaller. Well, what do all your clients want? They want transparency and they want efficiency. Efficiency is what's key. And that's what these floors are about. Just like you guys, I started in the business when we were trading in paper and fractions when there was 5,500 people on the floor. But as markets evolve, so do we as market participants. And that's exactly what we're doing here at NASDAQ. And rather than just, cutting off the floor completely and ignoring the fact that you do need the guys and girls down there to facilitate trade at the end of the day, they're taking the best of what's available in the crowd, and they're also taking the best of what's available in technology. And that's really what the wave of the future is going to be. At the end of the day, you don't need 5,500 guys, running around in 8 inches deep of paper. Everything is being, as efficient and as transparent as clients want their trading to be. That's exactly how they're running the floor here. And, if you ever have the chance to come see it, it will absolutely blow you away, not just because it's aesthetically pleasing, but the vibe and just the sense that you get that everybody wants to be there and they're flourishing is something I've not experienced in a really long time. And that's what makes it really exciting.
I do like the idea of a Google-esque trading floor. It sounds kind of interesting. Very modern. I do want to come out and see it, and one of these days I will make it out to Philly and check it out for myself. I do believe, talking to some of the folks today, listeners, if you want to go see it for yourself, if you're in the Philly area, it's not the old school venue. Like I said, it's a little bit smaller, so they don't have a visitors gallery, but I think they said if a lot of people want to come and see it, if they're going to be in, maybe they can arrange some sort of collective tours. You can come see it. So if you do want to go see it and see what the latest and greatest in options floor trading tech is these days over there in Philly, that is the way to do it. Speaking of which, anecdotally here, Jill, we get ready for this show every day, and we always compile a handful, usually 3, really interesting and unusual trades for our Odd Block segment, where we highlight unusual activity. And it sounds like, anecdotally, you guys are at least attracting some attention over there in the Philly today, because I swear to God, this was not intentional. I was looking over all of the trades we selected today. All 3 of them were pretty sizable. And take a guess, Jill, which exchange all 3 of these odd trades went up on today.
I am going to say the PHLX.
Yes, amazing. You get paid the big bucks, and now I know why.
There you go.
It's amazing. It's clearly something you're doing something right over there, because this is like, for example, we have a spread versus puts. We have some size, so all of them pretty sizable, and we actually have 2 verticals versus puts today. So 3-legged trades right there. We're working up to the 15 legs one of these days. But it seems like anecdotally, I have to imagine a large chunk of these were put up in the open outcry, just because that's where a lot of these things get facilitated. It makes it easier. So there you go. At least anecdotally here in your first. I know you were open a few weeks ago. Your first public official open day. It seems like you guys are gaining some ground there, Jill.
Yeah, we are certainly gaining some ground. And if we could plug this real quick, on our Market Insight blog for NASDAQ, each week we take a look at the prior week's actions, unusual options activity for the 6 NASDAQ options exchanges on NASDAQ-listed stocks. So we run that screen once a week. We'll take a look at what type of activity it was, and we'll analyze it a bit, and then also take a look at, what the fundamentals and technicals are saying. So it's always nice when you see the 3 line up. Fundamentals are saying one thing, the charts are saying one thing, the options crowd, which is a forward-looking product, is saying the same thing. So those are the type of things that we are taking a look at, I would say, for the past couple of weeks. Quite honestly, I didn't have the chance to look at all the activity today because we were so busy with all the floor activity. We have been, and this makes sense because we're in earnings season right now, detecting a lot of bullish activity in the semiconductor space and the individual related stocks. And we saw that play out with OnSemi. We saw it play out with LRCX. We saw some nice activity in Micron today as well. So those are the type of trends, whether we're looking at the specific space, the ETFs, or the individual stocks. We are screening specifically for NASDAQ exchanges, NASDAQ-listed stocks, and for unusual options activity. And you can catch that every Thursday. It gets published on our Market Insight blog. So we are screening that just as much as you guys are, and hopefully next time I'm on, we'll have a lot more stock-specific and strategy ideas to talk about with this activity that we're picking up.
I like it. See, she's a pro. She's already got the info. If that was my next question for you, and you're already way ahead of me, so I love it. So yeah, good stuff. You kind of mentioned most of the outlets. I know you have to run. We kind of just wanted to squeeze you on the show today because we know it is a big day for you guys over there at NASDAQ Philly. So we kind of wanted to give you a little bit of shine on the old program, just to say to everybody, look, floor trading is not gone the way of the dodo. It is back. It's revitalized. It may take a different shape, have a lot more tech involved, and may look like Google, which is cool. Hey, Jill, can I ride a Razor scooter down to the new Philly floor? Is that allowed down there?
You can ride it around the office all day long.
There we go.
We even have a pool table here. It's pretty cool.
There you go. Now I'm definitely coming to Philly. Pool table, Philly cheesesteaks, a nice new trading floor. I definitely have to add that to my travel in a little bit. But Jill, I know you have to run. Like I said, we wanted to squeeze you on here before the show proper, so we can get a little bit of a taste of what's going on in NASDAQ. You kind of mentioned all the outlets, all the blogs you're doing, all the color, all the commentary. You mentioned, I think, the Twitter, if not at NASDAQ over there, listeners. Follow them over there. I'm sure a lot of you probably do already. But before you go, Jill, anything else you want to plug, anything else you want to mention for our listeners about maybe some hints for what's coming down the road as well? We kind of mentioned that increased outreach role for NASDAQ. Maybe some hints of what NASDAQ is looking to do in the options space. Now is the time. The floor is yours.
Oh, yeah, we have so much going on. What we're doing with our blogs and also with our Facebook Live product, we're having on options experts like Andrew G. Hopefully we'll get him when he comes down to New York at some point, every Monday, Wednesday, and Friday. So we're doing some Facebook Live with, general topics on the options industry. We talk some strategy. We'll take a look at, what's happening in the market right now. And then we write up these blog pieces around it, and we share it all over our social networks. So it's not only just the institutions that are getting the inside flavor. We're also expanding it to the retail reach as well. And we have just so much lined up. I would say 4 to 5 days a week we're pumping out this content. And, of course, now, working with you guys on Options Insider, and looking forward to sharing all of that. Unusual options activity, different strategies that we're looking at, different product that NASDAQ is launching. So there's like I said, we're only 1 quarter into the year, and there's just so much coming up for 2017 and beyond. And it's nice to actually look at the industry and not talk about, plateauing, but looking at growth and taking market share. And that's what we're really excited about here.
Yeah, market share, another big story going on in Philly. Didn't have time to even get to that. We'll have to save that for another time. Well, Jill, I'm glad you can join us here on this little brief interlude here, talking about all things the NASDAQ and Philly. And we look forward to talking to you again on the show down the road.
All right, great. Thanks so much for having me on. Look forward to it.
Thank you. All right, guys, that was interesting. Just the chance to talk trading floor. I got to say the word locals today in a conversation, and it was not ironic. It was real. There were real locals running around NASDAQ and Philly over there today. So that just warms the old cockles, the old school floor trader in me. I still have a little bit of fondness for that. As obscure, as outdated as some of that may be in this day and age, take a new technological approach. And look at the paper they're putting up. Clearly, there's a demand for this still. The high-end guys who want high touch, they have complex orders. Maybe not 15 legs. That's a lot of legs. Have you ever seen? I don't think I've ever seen a 15-leg order. Have you? Either of you guys ever seen a 15-leg order go up?
No. In the SPX, I think I remember 8-leg orders for rolls and stuff like that. But I can't I can't say I've seen a 15-leg order before. I was trying to name it, actually.
That would be good. You could come up with a name for that.
It's a double broken leg spider, I think.
Double broken leg spider
Double
ratio
broken
swap.
leg.
It's got to be some sort of swap in there too, so you get 2x at least. You know, you get you're right. SPX was the home of all those weird, crazy quotes, and even then, I never quoted anything approaching 15 leg. I think probably 8 to 10. And even that was kind of like, all right, guy, I know what you're doing. You're trying to pick me off in some crazy way. Just get the heck out of my face. So we, that game, 15 legs, it's tied to stock. So it might as well be 16. So lots of juice, I'm sure, in that trade. But interesting stuff. If you are going to be in Philly, you should reach out to NASDAQ, reach out to Jill. She's on Twitter, pretty active. And if a lot of you do that, then we'll put together some tours. You can go see it for yourself. All right, let's get into it, gents. A lot of stuff popping off today. It was indeed not just an active day over there on the Philly, but also an active day in the market. Most of the major indices closing up on the day, about nearly 1%, about 0.8 or so in the S&P, and most of the other major indices up commensurate amounts. That means all that green on the screen means a little bit of red out there in the vol space, finishing the day off about close to a handle, right around the 14 handle, 14 and change out there in VIX cash. And Sebastian isn't here. I can say over 5%, percent of a percent. I know he loves that. So a lot of interesting stuff going on out there. You guys, I know you were busy looking at a lot of things, including what was cooking in the NASDAQ land today. So what caught your eye in today's activity? Let's start with you, Uncle Mike. What caught your eye today?
Well, once again, I think a lot of it has to do with macro. I think that with talk about North Korea, Trump's meeting with the Prime Minister of Italy today, and then there's talk about how Trump liked low interest rates when he was campaigning. He likes low interest rates now, and the markets seem to move on that. So a lot of this, I believe, is what going on is macro. A couple interesting points of note throughout the day today. Gold was relatively flat. Silver was down slightly, so there wasn't a ton of movement in the precious metals. XLF was up 1.5% on the day. So of the sectors, financials were a big mover. Oil was down, but very slightly, not enough to bring down my beloved XLE. It was up roughly 0.5% on the day, not a lot. Oil's still holding 50. Oil's just kind of been sitting there recently, but it is still holding the 50 level. So for those of you oil bulls out there, this is might be a time to take a look at it because it's still above the 50 level. And if you're looking for some type of a dip and you think it's going to go significantly higher, this might not be a bad time to get in if that's what you are looking to do. So overall, from my perspective, I think a lot of things are macro as to what's driving the market at this time.
You've been talking to the Viceroy again, haven't you?
I know. I'm going to start wearing fancy hats, and I don't, but in reality, if I can be 1/10 of the option prognosticator the Viceroy is, I'll be probably about 10 times better off than I would have ever dreamed of.
I'll get him back on the old show, too, just for a check-in on all things macro and also to shame all of our listeners who like to trade options on sub-$5 names, because we haven't done that in a while either.
He doesn't shame many people, but if you trade options on the $5 and under stocks, he will shame you.
There will be some shame. All right, speaking of shame, Mr. Rock Lobster, what caught your eye in today's activity? So I couldn't resist. Sorry.
I'm too shocked to claim umbrage. Too shocked. Anyway.
You left the opening. I just stuck the dagger right in, and then I twisted.
Oh my God, my poor heart. It's bleeding. It's bleeding red.
You bleeding heart, you.
Bleeding red like the VIX. You know what? When you said macro, I was thinking, oh my gosh. Tosaw and I are thinking the same thing. I feel normally I don't like looking at a lot of news, on pricing options. Because I'm a vol trader. Besides the fundamental stuff, I don't think much of that. All that trading options is basically it's still a volatility game for me. But the reality is, all of a sudden, there was talks about maybe the Republicans have a deal for healthcare. Maybe they reduce baseline spending. A market like that. The French election thing, I think it keeps coming up on the radar and then going off. But one thing that you can see from the market is the market wants clarity in the budget going forward, like it always does. Less spending always is better. Remember, the biggest rally 2014, that was the year. Wasn't that the year that we had with the 30% up in the SPX was 2014? Or was it 2013? I can't remember. It all kind of blurs together sometimes. But that was on the back of, the fiscal cliff and what else do they call when they stopped spending money, what the heck was that phrase? The sequester. That was it. Sequester. It was the sequester, and it was the fiscal cliff. And the market literally, once they started curbing spending somewhat for them, putting caps on discretionary spending, the stock market took off. Really, that was what got us from, I would say, the 1,500 level when we were kind of flirting with the old-time highs to new highs, because the market likes to be able to see into the future as much as possible. And if Congress can get their act together, they look like like a Buster Keaton movie 3 or 4 weeks ago. Couldn't, hey guys, make a decision. And I think that soured the sentiment. We went sideways. Then whatever European problems take over, we have a couple of geopolitical issues, and all of a sudden equities sag. But as soon as that dial gets turned where the geopolitical issues aren't on the front page all of a sudden, there's more positive spin on what's ever going on with the budget and the government in general, we rally. So I think the market wants to rally into that stuff if it can get any kind of look in the future. Any kind of controlled spending for the budget generally has been bullish down the road. Even if it's a tax increase, the market has liked it in the past. Look at the 90s when Rubin and Clinton sort of right-sized the budget. You got started the run. If they can do anything like that, some sort of control over entitlements, you'll probably see something similar, because that means there's some stability into the future. But I'm just looking at how I've seen the trends for the last 25 years. And that is, at least when you see a rally today, you're like, what's the rally for? The market at this point wants to rally if it has any kind of reason it could see into the future. I think that was today. And earnings have been okay. Financial earnings have been okay. Not great, but okay.
Okay, and with that okay, let's keep on rolling into some of the crazier action we saw today. Ironically, all in the Philly, because it's time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
Everybody, that funky tune means it's time once again for the Odd Block, the portion of the show, the funkiest portion of the show, some might say, where we break down the weird, the wild, the head-scratching, sometimes just bizarre paper that is catching our eye today. Going to call it the honorary Philly block today, because we got all trades going up, probably most of them on that brand spanking new floor over there on Philly. So look, I guess build it and they will come, because they're going up over there today, and we're going up all day. We'll have to get a local on, chat with them one of these days on the show about why they're down there, what they're doing down there, what it's like, all that kind of fun. Can you eat down there, which is always a big bugaboo on the SIBO floor. Couldn't even bring water on there. They would tackle you to the ground. So maybe things have loosened up. And you certainly got the razor scooter going. Why can't you have a nice hoagie, as they say, over there in Philly on the trading floor as well? All right, let's move on into the activity. Caught our eye first here on the old show. Ticker, probably one or two may be familiar with. This is Walmart, ticker symbol WMT. Closing today, a good day for Walmart. Up about 1%, pretty much moving in lockstep with the market there. Closing right around $75, a little bit under to end the day here. This is the name that does, as you might imagine, pretty decent paper. About 31,000 contracts a day. Today doing about 65,000 and change. So pretty much a little over 2x that, and of that about 2.5 to 1 calls leading puts out there. So it was an all-call day, even though our trade involved all three, calls and puts in 3 legs, I should say. Not 15, but 3. We got you up to 3 so far. We'll have to see. We'll have to work Mr. Rock Lobster in getting a nice 8 or 10 legger on here one of these days just to put the old analysis to the test. But we'll settle for 3 legs today. It was indeed the May, so just the May, not the weekly, so straight up May. 75, 77.5 vertical going up against the May 70 puts. Looks like paper selling that vertical to start the day about 9,000 times, a total of about 11,000 and change on the 75s and about 10,000 and change on the 77.5. And then doing that for, for 72 cents on the vertical, and then blasting out the puts as well. So selling a wee bit of premium out here. Doing that to start the day, also about 9,000 times, a total of a little over 10,000 on the puts as well. Doing the puts for 37 cents. As we mentioned before, went up in 3 blocks over there on the Philly. Again, mark spread, didn't see any underlying going with it or anything like that. There is some OI to be noted, though, on these strikes. About 7,000 on the puts, so clearly not enough to be closing there. But on the 75s, it could be. There's about 17, nearly 18,000 contracts up there. So it could be a couple of different interpretations of this guy. It could be straight up someone saying, you know what, I think things are going to be relatively boring out here in good old Walmart, so I'm going to blast away a nice little 5-handle strangle. But just in case things are a little bit more active, I'll pick up a little bit of upside protection for myself as well. That could be one way. Or it could be, given the size OI out there, it could be someone perhaps getting a little bit nervous, being short some size on the 75 handle. Again, we closed just a hair under 75 today, maybe not wanting some of that juice to get called away. Also, perhaps not sad about or worried about picking up some more to the downside and deciding to roll that up yet another strike to the 77.5 range. Looking back at the year that was out here for good old Walmart, obviously a leading retailer, a bellwether of the economy in many ways. They've had an interesting range, getting down as low as about 62 and change back about a year ago, a little less than a year ago, back in mid-May or so, and getting a high, in fact, hitting those highs right around now, right in the 75 range today. So it's been an interesting run for Walmart. The last part of it, at least, being decidedly bullish. So, Mr. Rock Lobster, what say you here on this pretty sizable print? You think that this is someone rolling? You think they're rolling those 75s? You think this is someone straight up saying, you know what, Walmart's done at least until May, and I'm going to blast out some premium to do it? What are you feeling here?
I'm thinking that somebody was pretty savvy buying the 75s, got to the strike, they rolled up, and then they doubled down and sold some puts against it. That is what me thinks on this particular trade. So it's feeling a little bit like somebody's doubling down on this one. What say you, Mr. Longo?
It does have a bit of a hallmark of that. You know, I when you see that size open interest on a strike like that, it's kind of hard to divorce it, even though we won't know for sure. Unfortunately, as we said many times, OI not going to update until the end of the day. So we have to wait to the end of the day to know all that stuff. But still, it does have all the hallmarks of someone, you're right, kind of sitting on a strike and perhaps deciding, you know what, this one maybe makes a little bit more sense out to 75, 7.5. And also, again, deciding they don't want to shell out too much for this whole thing and deciding for whatever reason 70 is where they don't mind going on the downside. Let's see the last time here really quickly we flirted. Actually, it was through 70 not that long ago. Back in just about 3 weeks ago or so, it was south of 70. So the 70 handle is an aggressive sale. That's the one part that has me kind of scratching the heads a little bit, saying maybe that one could come back to bite them. But either way, this is an interesting play. Clearly betting on Walmart's not doing a whole hell of a lot for at least maybe the foreseeable future. But interesting stuff here. Nonetheless, we got 3 legs. We'll see if we can get 15 coming on another show sometime soon. Let's move on, though, to another name. This is a frequent offender on our unusual activity. It's pretty much always on our most actives. If you follow us on social media or on the website, you know we put out a lot of top 10 most actives throughout the day, midday, end of day. And Bank of America can often be found on those most actives, and it's in our odd block today as well. This time, Bank of America, of course, BAC closing right about $23 and a little bit of change to the upside. This name, as you said, does a lot of paper, doing about 426,000 on average. Today, doing a little bit shy of that, about 406,000. Pretty even as well, 1-to-1 calls to puts out there. So that wasn't what caught our eye. It was instead a pretty sizable put print. Say that a couple times fast. It was the April straight up regular weeklies here. Looks like we have a couple of them. Starting off with it was the April 28th. A lot of size put prints out here today, so it's hard to sometimes intuit because there was size in the front month as well. But let's go out to the weeklies, to the April 28th, or 28th, I should say, expiring on the 28th, the 23 strike, or 22 half strike, I should say. 22 half puts going up 40,000 times. Yes, 40,000 times to start the day, listeners. Paper blasting them out for 22 cents. Going up in one block. Guess where? The Philly. Again, went through the bid, sold through the bid. This is where it gets a little interesting. It could have been opening, because this is pretty aggressive. On the other hand, there is size open interest here. So it could have been someone perhaps deciding discretion, the better part of valor, closing out there's nearly 79,000 contracts open on the strike. Someone could have come in and closed out more than half of those today. If they did do that, maybe a little bit of interesting timing, since we did see it up about 1.5% today, and with his puts came in, the stock took off pretty much right after that. So their timing a little bit interesting on that one, to say the least. But either way, this is an interesting one worth watching. Someone's either drawn a pretty sizable line in the sand here, which already looks like there is a pretty sizable one drawn there, with about nearly 80,000 contracts open. Yet another almost 50 going up today on these April 22 half puts expiring on April 28th. So interesting one there. Looking back at the year that's been out here and back, going back and back, closing about as low as about $12 back in late June of last year, and today nearly 2x that, 23 and change. So it's been an interesting run out here. Mr. Rock Lobster, another interesting one. Where do you fall on this one? A little bit of contentiousness with this one as well, to coin a phrase. This one is, you think it's opening? You think this is our friend kind of closing out and saying, getting the heck out of Dodge, in which case is timing perhaps a little bit questionable?
I am thinking this is opening only for the fact that 22 and a half, if you look at, and I'm not a chart reader by any stretch of the imagination, 22 and a half looks like a fairly reasonable line in the sand to just after the election for Bank of America. It had that kind of the quick run, ran close to 26, and it's pulled back. And it looks like, that's the spot somebody's picking to own some Bank of America. Post, they're not buying it at the top, and they're looking at those puts like, okay, I'll take those. So I would not be surprised if we see larger open interest on the 22 and a half strike, and someone got kind of, they're just looking, to me, it looks like free 1% for a week carry. So at worst, they're getting the stock below the market, but that's one I'll check the open interest on tomorrow. Just to see if that, the volume on that strike is expanding. Even if it's closing, they're still saying you're closing that put for 22 cents is just saying I don't really see a chance of making money on it, which is fading this whole European election thing, I might add, pretty large. So either way, it's kind of looking bullish when you whack those things out and the stock goes straight up after that. Just, as an old market maker, you know when somebody hits your bid for size on puts and the stock immediately flies up, it's opening.
It's just it's just pure fortune, pure coinkydink, pure coinkydink.
Somebody is just, there's sometimes they're just so good, right? Nobody is that good at closing 40,000 contracts.
An interesting one, to say the least. Speaking of interesting one, listeners, if you were intrigued by our talk of 15 legs, we got a good one for you to wrap it up here. This is in good old SBUX. Yes, Starbucks closing at $60 and change, up about $1 or nearly 2% on the day. So a pretty active day out here in good old SBUX. It's a name, as you might imagine, does pretty decent paper, about 37,000 contracts a day. So probably 100x what our typical odd block candidate usually averages. Today doing nearly 100,000, about 95,000 contracts, about 3.5 to 1 calls over puts. A lot of that due to this pretty sizable four-way. Yes, a four-legger. We got a four-legger for you today, listeners. Can't get 15. We'll go with 4. again, put up by our friends over there on the Philly. I'd be stunned if this one wasn't done on the trading floor, because anything usually north of 3 legs is pretty much going to be usually done in this kind of environment. And in this case, it was the April, again expiring on the 28th, so we're playing in the weeklies again. The April 57.5, 59.5 vertical, that one going up on a ratio with paper selling 12,000 of the 59.5s, and I believe picking up 6,000 of the 57.5s. So doing that 1 by 2, and then turning around. That wasn't enough. Listen, doing those for 296 by $1.51 respectively on both of those strikes, and that wasn't enough. They decided 2 more legs to add a little bit of extra fun. It was the April 61, 28s as well. 61, the 62 half going up for some size as well. 57 cents and 16 cents respectively. Actually, 61 half. 61 half, 63 half on those. It's going up about for 57 cents and 16 cents, like I said, respectively. Doing those a total of 1 by 1 on those, 12,000 by 12,000. Only strike really with size open interest is the 59 halves with 6,000. Of course, if you're looking at closing, 57 halves have almost exactly the same amount, 6,000 open as well. So looks like perhaps potentially some ratio closing and then reopening, this time 1-to-1 on the 61 halves and 63 halves, because there really is no open interest to speak of on those. Again, the stock closing right kind of mid between those two, right around $60 and a little bit of change. So perhaps our friend here deciding it is time to roll. Mr. Rock Lobster, take us home. What say you on this massive 4-legger going up on the shiny new Philly floor, sir?
I look at this trade, and to me, it is one of the most confusing positions I have ever seen somebody put on.
It's a good one to try to analyze in like 30 seconds on the show.
I was about to say, I mean, you look at this thing and you go, okay, so there's fairly high open interest on the 7.5 and 9.5 strike. They look like they're buying to close for sure, which means that somehow along the way, according to how SBUX is moving, they must have sold calls, into the near-term lows. SBUX is up quite a bit over the last month, about $6 or $7. So it blows through the strike, then they buy them back, and then they sell through the bid the 61.5 and 63.5 calls twice as much. Even they sold the 63.5s for 16 cents. To me, that kind of screams a little desperation for yield somehow, some way. That's how I read that. If you do that as a 1 by 2, I mean, I guess it helps pay for your calls, but geez Louise, just not. I don't get this trade whatsoever at all. It totally confuses me, and I guess if you're trying to micro dial what the upside is, I guess you could do that, but massive confusion on this.
Hashtag massive confusion. This is what you feel for us listeners. We get these things to look at, and Andrew gets a little bit more time with them. I get about 30 seconds, so it's always fun. This kind of reminds me of the old SBUX days when the phone would ring, Mr. Rock Lobster, and here's your 8-way tied to futures. What do you got? The good old days, the fun old days. We're replicating a little bit of that in the old odd block today. But, we were going to keep rolling, but it is Thursday. I feel like I'm depriving you guys. We got a little bit of time. So let's welcome on Uncle Mike then, I think, for a surprise strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the strategy block.
Uncle Mike, we're going to have you put on your big boy pants today. I kind of surprised you. You didn't think we were doing a strat block today because we had so many other things to talk about. But you know what? I saved a little time for you. I didn't want to deprive the listeners. They love their strategery so much, sir. So you got about 8 seconds to think of something. What do you got for us today, sir? Go.
The power of gamma.
Oh, that was fast. We're going to talk about the Hulk and Bruce Banner and all that good stuff?
Of course. Very good. Star Wars and the Incredible Hulk, the themes of this show, and 80s pro wrestling, of course. I want to go through the importance of gamma. I know a lot of people over the course of the last week or so, just with kind of the market going down and then up, you may have gotten chopped out of your short option positions. So I want to go over the importance of it and how it can really, if you're short options and it goes against you, it can really, quite honestly, blow you out if you don't take good care of your risk management. What is gamma? Gamma is the measurement of how much the delta will change with a $1 or 1 point movement in the underlying. So what does that mean? Let's say that you have a 50 delta option, which is an at-the-money option. Let's just say it's a call option for the time being. Now, there's 6 factors for option pricing, and I'm only going to talk about one of them today, but I want to talk about the importance of it. The disadvantage of buying an at-the-money option is that you have time decay, and the time decay goes away. It's something that's working against you from the second you buy that option. But should the option go your way, you have a 50 delta option, and gamma is how the delta changes with a movement in the underlying. The further in the money an option is, the higher the delta. So if an option's $10, $20, or whatever the case may be, the further it goes in the money, you're going to have a higher delta, and the option's going to cost more money. Delta is the equivalent of how many shares you own at that specific micro instance in time, because it changes constantly. So with that being said, the power of gamma is that, let's say you buy an at-the-money option. Stock goes up a certain percentage, and volatility, let's just assume, stays the same for the purpose of example. It likely would not, but let's just assume it does. And let's assume that time stands still, and that we're living in a vacuum, the great gamma vacuum. And gamma is the only factor that exists. Now, as that option goes higher, gamma is going to change the delta. Stock's going to go higher, the option's going to be in the money, and so the 50 delta option becomes a 60 delta option. So now you no longer own the equivalent of 50 shares of stock, you own the equivalent of 60 shares of stock. So think of it this way, this is the power of gamma. If the stock goes your way, it's the equivalent of buying more shares as the stock's going higher without taking on any more risk and getting exponentially greater and greater rates of return as it goes your way. Now, quite frankly, if that doesn't excite you, then I don't know what will. Then you do not belong in being an option trader if gamma doesn't excite you, if it's going your way, quite honestly. Now, on the flip side, here's the other side of it. That's where it can really benefit you. Now, of course, if the in the money or the at the money option goes against you, reverse everything that I said. And as much as gamma can excite you, it can also scare the living crap out of you if it goes against you, as well as it should. So if it goes against you, this is where it can be very powerful. Let's say you sold an out of the money put. XYZ stock's at 30, you sell the 25 put, stock goes down. Initially, that short put that you sold was worth maybe, 7 or 8 deltas. Because remember, you're selling the put, so that creates positive delta. So with that being said, as the stock goes down in value, the value of that put becomes greater and greater. Now remember, you're short that put, so that's bad. And if it goes from 30 to 29, probably not a big deal. If it goes from 30 to 28, still not a big deal, but you still have to look at it a little bit more. You're starting to get that kind of uncomfortable feeling. If it goes from 28 to 27, I really don't like this. The reason I sold such a high probability put is I didn't want this feeling. It goes from 20 to 26, you start to sweat a little bit. From 26 to 25, all of a sudden, that 40 cents that you got for that $25 put a couple of weeks ago, now all of a sudden that put's worth $4. You were looking to make an easy 40 cents on this trade because it's so far out of the money. It had a 96% probability, and now you're down almost $4. Not where you want to be even a little bit. And that's the power of gamma. 2 ways with which it needs to be used, in my opinion. There's a lot of ways it needs to be used, but 2 ways I really want to emphasize for risk management on this. If you're buying an at-the-money call or an at-the-money put for that matter, if it doesn't go your way, if it starts going against you quickly, I think you need to exit the position right away because it's only going to get worse, and it's only going to get worse quickly. If you're selling an out-of-the-money put or an out-of-the-money call for that matter, don't wait until the option goes in the money or further in the money till you get out. Monitor the delta, and when the delta goes to a certain level, that's when you look to get out. Now, nothing wrong with selling an at-the-money option. Let's say same stock is at 30 and you sold the 29 put. stock goes down to 29.30 or whatever your mark is, and you get out there, that's fine because you're taking on an initial higher premium. But if you are selling something far out of the money that's a high percentage trade, I would strongly advise that you have a plan to get out before it gets to the point of the gamma exploding. And that is the strategy block for today.
There you go. Gamma explosions. We're all about them here on the old program. We're also about the Around the Block. So let's get to it with some Around the Block action.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, buddy, welcome to Around the Block. Like the name implies, this is the portion of the show we tell you what we're keeping an eye on for the rest of this week into ye old weekend. A full week this week, no holiday truncations going on here, so we're getting into some action. Now, we touched on the top of the show, it is still very macro-driven, but it is nice, and hopefully some micro events will pop up to steer the direction away from all these things that are out of control and into really things that can be analyzed and crunched and diced down to things like gamma, which are always very fun. We asked you guys also this week to vote on what you thought. Earnings season coming back, got some juicy straddles coming out. We asked you which one you think is the most overpriced. Was it Netflix? Was it Bank of America? Was it eBay? Or was it E-Trade? Netflix at about 8%, Bank of America at about 3%, eBay about 7%, and E-Trade at about 4%. Really quickly, Mr. Rock Lobster, what do you think they picked?
I am going to say Netflix because everybody loves them.
Indeed, and for a while there, it seemed like it was the most overpriced straddle imaginable. It was unched at one point in the after hours, which is crazy. When's the last time you ever saw Netflix do that during an earnings? Never.
Never.
Every single premium seller just had the biggest grin they ever could possibly have on their face. It ended up opening down a little bit, but still, that one certainly fired up. Mr. Uncle Mike, what say you, sir?
I'll also go with Netflix.
You guys cheated. You looked at the poll. No, that one's pretty easy one to guess. Yeah, Netflix winning with about 65%, 19% saying eBay with 7%, also kind of juicy. Only 12% saying Bank of America, and only 4% saying E-Trade with 4%. So there you go. That one pretty much, it goes the rest of the week, but those earnings are out. So maybe we'll swap in a new little quick poll or quiz for you guys tomorrow. I know you guys love to play along with our polls and quizzes. Speaking of playing along, let's play along with what everybody's watching for the rest of this week into the weekend. Let's start with you, Mr. Rock Lobster. What is catching your eye, sir?
What's catching my eyes is, this French election wild card. French election wild card. Is it Le Pen, who apparently is much friendlier with Putin than Trump is? Then you got the lefty, and then the person in the middle who probably looks a little normal. I guess we'll see. I think that we should probably see a little bit of bid for volatility into the end of the day. I have to admit, though, the market did take discounted vol, pretty significantly. We still have a single-digit realized vol. I think, 6% or something like that. So I still think I still think the wind is behind the market's back. If we can get more of the sort of the positive stuff moving forward, good earnings and some sort of adult behavior in Washington, right? But the latter, of course, we don't know what we'll get. But I think this French election thing is the big one. That would be it.
It is funny how Mr. Putin just rearing his ugly head in pretty much every election around the globe these days. It all comes down to how close are you to Putin?
You know what? And who cares? But apparently, he has the best PR person ever.
Him and Elon Musk must share a PR guy. Of course, his PR team obviously taking the tack of no PR is bad PR because not all the Putin stuff as glowing. You got to stop shooting people and poisoning to really get that good PR. But that's a conversation. Conversation for another day. All right, Uncle Mike, what's catching your eye, sir? Aside from the explosion and exploding power of gamma.
Absolutely. We're in kind of a channel of SPX of SPX, but just the market in general over the course of the last month or so. We're at the higher end of it in a lot of ways. Could be not exactly at the high of it, but we're definitely closer to the high than we are the low. Curious to see if we break out of this in one way, shape, or form. I mean, I'm obviously the perma bull, so I'm pulling for the upside, but this little channel that we've had over the course of the last month is probably the main thing catching my eye. Of course, oil and 50, that's a big psychological number. And I just want to see if we can break through at this point. And, I'm also watching all the macro things that were just said, but I will waste no more airtime on that.
Airtime is getting precious because the music's playing. That means we're coming up against it to the end. Yet another epic journey through the world of options. Mix it up for you guys a little bit today, listeners. Started off actually heading back to Philly, where we talked all things NASDAQ, PHLX. If you want to hear more, I had a great chat earlier today with Kevin Kennedy as well. He is the head of options over there at NASDAQ. And clearly, they own 6 exchanges, so they have a vested interest in this market, and it's nice to see they actually are paying attention to it, which is nice to see in this day and age when most exchange groups have divested of things like education and other arms, outreach, thought leadership in this space. It is nice to see someone thinking about maybe making a move back, which would be really good to see, particularly because they acquired ISE, and ISE used to have a very great education arm led by none other than our own Viceroy. He used to run their education over there. So it would be nice to see some of that legacy return as well. So stay tuned for that. And again, stay tuned to our network and to the Options Insider Radio interview show, where I have a good chat with Kevin. Should be coming out tomorrow, I believe. You can also hear the live version over there wherever you find our live shows, including, of course, the Mixler show reel there. But before we go, let's go around the horn again one last time. Let's start in reverse order. Uncle Mike, what's cooking in the land of RCM alts / MISC / futures / wealth advisors?
Well, we're not going to be offering this for that much longer, but for those of you that still want to take advantage of this, feel free to contact me on it. If you open up an account at RCM and trade through RCM, we have brokerage relationships with TD Ameritrade, Interactive Brokers, and Trading Block. Feel free to contact me. You could save some money depending on what your commission structure is, and likely you will. But here's the best part of it. If you end up becoming a client of ours at RCM, we will pay for 1 free hour of you to ask Andrew anything that you would like, or set up something to where you can talk with him about perhaps the VIX, perhaps about trading, perhaps about floor trading now that it's a big thing. And as an added bonus, he said he will also talk about chainsaw maintenance and how to put in a dock in the state of Maine.
You can't beat that. Can't beat that. For an hour of all things power. You can talk about the explosions of Gamma, talk about Bruce Banner. He'll talk about docks in Maine as well, or lobster fishing, or whatever catches your eye. You can do it remotely. You don't have to go all the way out to Maine. That would be a huge pain to go to Maine. All right, Mr. Rock Lobster. Stop me before I rhyme again. What is cooking in your neck of the woods, sir?
I am just looking for a big event in Chicago. We'll have our Pro Trader Summit in late June, and our master classes will be restarting. And oh my gosh, more learning from the people at Option Pit. 6 years now and running, continual at Option Pit. Actually, almost 7. Hard to believe.
That is hard to believe. Let me know when you get to a decade. You guys are whippersnappers over there.
I'll give you a guess. It's probably going to be within 3 years.
Yeah, that's good. Good planning on your part, sir. I know you guys like to plan long term. Your webinar is out for the next 7 years, so we can get you covered there. All right, hit us up if you want to know more about that hour of power with the Rock Lobster. Reach out to Uncle Mike. He just gave you all the info there as well. We'll get you set up. You can talk all sorts of fun things. And indeed, join us back again tomorrow if you are out there live. Join us tomorrow, 12 o'clock Central, 1 p.m. Eastern for volatility views, and then 1:30 Central, 2:30 p.m. Eastern for TWIFO this week in futures options, breaking out a lot of cool stuff there. And of course, this program, we'll see you next week for more of the Option Block.
preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.